When's the last time you gave yourself a raise? Yes, you are empowered to give yourself a raise, and how you do that is by investing in dividend-paying stocks and ETFs. Let's say, for example, that every time I put $100 down on a share of stock, I give myself a raise of maybe only 20, 30, 40 cents. But it snowballs up to where you can make maybe 6 figures per year in dividend payouts alone. Today, I'm going to break it down and share with you my $30,000 portfolio. And if you remember my video from a month ago, it was a $13,000 portfolio. Whoa, how comes it grew so much? Because I'm doing a lot of side hustles and I'm focusing on things that generate me income outside of my job that I can take and reinvest it into dividends. If you're into personal finance and you want to get out of debt and build your future millionaire status and live your ultimate sweet life, subscribe today for more awesome videos. So let's get started with today's video, where I'm going to break down my portfolio of $30,000 and explain how I'm making about $1,000 a year in dividend payouts. What's super cool about this is you have two scenarios that can happen. One is the future growth of a stock. So let's say you buy a stock and your goal is, I want to buy something for $100. And my goal is maybe in 5, 10, 15 years, I'll look back and that $100 maybe grew to $500, $1,000 or more dollars. That's one way to do it. And that's a cool way to do it. But there's also those companies out there that pay you a dividend just for owning their shares of stock. Not only that, you're going to get the growth, as I just mentioned, but you're also going to get paid based on how many shares you own, extra money, just for owning shares of the stock. That's called dividend payouts. Super awesome and super cool. Let me break down my last month's income. I'm going to start with my two favorite brokerage apps and what I made in those. And then I'm going to take you into a website and I'm going to update my portfolio. Now that portfolio has all of my different brokerages. Yes, I use a lot of brokerages because I like them for different reasons. But I'm going to show you my entire portfolio of $30,000 and how much my annual income is based on that portfolio of $30,000. Okay, let's start with Webull and let's talk about the dividends. First thing I made was $4.94 last month on SPHD. This is a particular ETF that tracks the big movers in the S&P 500. So basically I owned at the time 35 shares, which was 14 cents per share. So you can multiply that up, I made $4.94. SPHD pays me every single month. So depending on how many shares I own, as I keep adding shares, they're going to keep paying out 14, 11, 20 cents, whatever it is for that month. And then I multiply that up and that's how I get that money, which is why I say every time I buy another share of stock, I give myself a raise. The more, the merrier. Pretty freaking awesome. Let's go on to the next one at KBWY. This is the Invesco ETF that tracks a bunch of REITs, real estate investment trusts. I love REITs, very big part of my portfolio. And they paid 12 cents on 70 shares. And that means that I made a total of $8.37 with KBWY. Next up on deck is MGC. This is the Vanguard Mega Cap. This is where you see some of your big tech and big companies in the blue chip environment at 43 cents on 5 shares for $2.17. Now the reason that one paid more is this one pays quarterly, not monthly. So of course 43 cents is a lot more than what we just talked about at 14 and 12 cents, but that is because they also pay quarterly along with a different dividend yield. Let's talk about another monthly paying dividend ETF, and that is PFF. They own a lot of the financial services out there. They own a little bit of JP Morgan, they own a little bit of Bank of America, so on and so forth, and they paid 15 cents on 45 shares for a total of $6.82 earned last month. And then my favorite, this is not an ETF, but this is a single stock, and it's called O. It is Realty Income. They are a real estate investment trust that invest in properties, physical properties that you may have heard of before. You ever go to a 7-Eleven? You ever go to a Dollar General? So 24 cents on 40 shares last month netted me a total of $9.40 on Webull, and that is awesome. Hey, if you want to find a way to figure out how many dividends am I going to get with my Webull account, you just click on Performance under your main tab, and it'll let you know any upcoming dividends, as well as you can go back in time to see what you earned in your past. Very easy way to do it. Now let's hop over to Robinhood. Now Robinhood, I have a smaller portfolio, but it has some single stocks in it. This is not the ETF world. This is more single stocks. And we're going to start with Bank of America. Earned 18 cents on 2 shares for a total of 36 cents. Not a whole lot, but hey, money's money, and that is pretty cool. I actually take that and I reinvest it into Bank of America. That's the cool thing about Robinhood, is they do allow you to reinvest your dividends. What that does is that creates a snowball effect that we'll talk a little bit about later on in this video. Webull does not still offer that as of the recording of this video. It's killing me. So if you like the idea of dividend reinvestment and fractional shares, Robinhood might be the better way to go. Let's move on to the next one. Coca-Cola. You gotta love Coca-Cola. Let's raise our glasses with some Coke or some Sprite, and that is 42 cents on 5 shares for a total of $2.10. Again, reinvested. AGNC, that is a real estate investment corporation as well, 12 cents on 10 shares for a total of $1.20. Last but not least is my good old trusty AT&T. I have a video coming up about AT&T that you don't want to miss. Right now, paying 52 cents on 9.0941 shares for a total of $4.73. Here's what I want to do. I want to take you behind the scenes of my $30,000 portfolio and really update it on a free website. You can do this for free. They do have upgrades available, but I just use the free version because it's free. I don't like spending money. Tap the like if you like saving money too. So trackyourdividends.com. I'm going to track my dividends, but it's called Track Your Dividends. My dividends. Your dividends? No, I'm tracking your dividends. No, I'm tracking my dividends. Whatever. Trackyourdividends.com. Here we go, pop up the iPad screen. This is what we're looking at. So right now you can see it's a $29,000 portfolio value, but we're about to update that right now. So very first thing I'm gonna do is I'm gonna start with my Webull account. Now, what you can do is right over here on the left-hand side, you see it says portfolios. Click on that, and then I have my Robinhood, Webull, Stash, Schwab portfolios listed in at the moment. So I'm gonna click on Webull, and right here it is. Here are my current holdings. Again, all of this is not financial advice. Do your own research and make sure you don't copy me because I could be making moves off camera that you don't know about. So here we go. I'm going to update what I have currently in my portfolio. As you can see, I do have a non-dividend paying stock in there, NEO at 40 shares. That is killing me because that's part of the good old tech stocks, the EV stocks selling off. Of course, you never sell when things are going down, so I'm going to be riding the wave with NEO for a long period of time until that gets back up into the green. And then we'll see what happens. Maybe I'll sell that and reinvest that into a dividend-paying stock or ETF. First thing I am going to update is right down here. It's SPHD. I now own 50 shares of that. So what you do on trackyourdividends.com is you go over here to edit. I'm going to hit edit. And I'm going to come up here, and then my current shares are now 50, which does mean my cost per share did change. It's now at a total of $40 and 268. Now, you can find that on your brokerage app of choice. For example, if you decide to go with Webull, check that out. And what you'll see is that it has it listed right below the current price. So you can see in this example, right now it's $43.50, and the average cost, which is located right below that on the Webull app, is $40 and 268. That's where I'm getting that number from. I'm gonna hit edit. And then, of course, the cool thing about everything that comes down to dividend paying income is now I gave myself a raise. So now, on an annual income basis, this is what I'm trying to show you here, my annual income on SPHD is now $90. Every time I invest more money into whatever dividend, ETF, stock, whatever it is, I am giving myself a raise. Hello, can we get a like for how awesome that is, right? Next example, let's update PFF. Right here on Webull, I now have 50 shares, so I need to edit this and update this as well. So my shares are now 50. And the average price is now up to $38.011. So we're going to update that. Obviously, these are going up in value, so my average price is going up. If there is a market downturn, of course, my average cost will go down. That's what they mean by dollar cost averaging. The more you put into it, the more it could potentially come down. And that's super cool. Now I'm going to update O. Now, O, I have quite a bit in. This ad down here is killing me. Let me exit out of that. Don't you guys hate ads? Here we are at O. I now have 60 shares, and you can see right here it says 40. Now, just for the fun of this, look at the annual income, $455 in my Webull portfolio. That's $455 paid out in dividends alone. Who cares about the growth? The growth is right here, $133. It's lame because NEO is dragging me down, but regardless of all that, regardless of the growth or the not growth, I'm going to get $455 in annual dividend income. See how this is so cool? But remember that, $455, let's update O. I'm going to hit edit. I'm going to update this to now I own a total of 60 shares at a cost per share of $63.872. 63.872. I'm going to hit enter. And now look what it is, $516. Hello, just gave myself over a $50 raise per year just by doing that. And that's what I'm getting at, guys. You got to start today. And even if you only got $5 a week, That is $5 a week that your future self will thank you for starting today. Get yourself started with either Robinhood or Webull down in the description below. Super easy to do. Super worth it to do. Cut out something crappy out of your budget and start today. Let me give you an example of updating my Robinhood portfolio. I'm going to hop over to that one. Don't have a whole lot invested in Robinhood yet, but my annual income, as you can see here at the top, is $43 and a portfolio of $792, but that is obviously up because I need to update this. So within Robinhood, for those of you that are interested in that, I'm going to update my shares of AT&T. I have one extra share of that, now rounded out at 10 full shares of AT&T. When you click on the actual stock within Robinhood, it'll let you know what your average cost is, very crystal clear right there on the screen of the stock that you're looking at. So right there you can see the average cost of AT&T for me is $29.05. So I'm going to hit edit. I'm going to update. I now have 10 shares of AT&T at a cost per share of $29.05. $29.05. Edit. And there we go. So now that's rounded up and that looks beautiful. I also have Stag, which isn't in this yet. So this is a good example if you need to add something new that's not already in your portfolio on trackyourdividends.com. Click on New Holding located right here in the portfolio that you're currently in. So I'm going to hit New Holding, and the ticker symbol that I added was Stag. That's a REIT that invests in a lot of different warehouses. Total number of shares is 2.59, and my average cost per share on Stag, according to Robinhood, is $35.57. Hit add. At $45 is now up to $49 in annual income there on Robinhood. So I'm going to take a quick break. I'm going to update the rest of these things, and I'll be right back with you, and we'll see what this update is here on the portfolio. Here we are with a $32,000 portfolio, thanks to trackyourdividends.com. Putting it all together, and my yield is a 4.69% dividend yield, which means my annual income at the moment is $1,505. So here's a very cool way to calculate how much money you might want in long-term retirement. So for example, outside of your 401k, outside of Social Security and all the other crap out there, let's say you start today with a dividend portfolio and you start building that up. So what we could do is say, I want to make $100,000 a year. So I'm going to take $100,000 and I'm going to divide it by 0.0469, and I'm converting the percentage into a decimal point, and that means I need to invest $2.1 million in order to generate $100,000 in dividend income based on my portfolio percentage right now. That might sound like a lot. You're probably running away and you're saying, oh my gosh, there's no way I'm going to find a way to get $2 million into a portfolio. But just hold on a second, my friend. Just wait. There is something that we're missing out on here, and that is the dividend reinvestment program. I'm a big component of making sure that you reinvest your dividends all the time. The more you do that, what happens then is, let's say you make $1,500 a year. It gets reinvested into the holdings that you currently have. And what that does is then the dividends now pay on your new shares. And then as it pays more dividends, it gives you more shares, and it keeps snowballing up. So that's how you start getting a significant snowball building up to your ultimate portfolio. And then before you know it, you look back and you're like, oh my gosh, I actually have a nice sized portfolio and I'm generating $10,000, $20,000, $50,000, $100,000 a year based on dividends. That's how the dividend snowball works, and it's super awesome. Go to trackyourdividends.com. They don't sponsor this video. It's just a super way that I found to track my dividends in one single location, and then you can break it down, not only there, but also your future value. Now, this is another thing that we haven't mentioned. Not only do you have the snowball working in your favor, but you also have the fact that typically companies want to continue to increase their dividend payout percentage. So over a long period of time, they're going to keep pushing that up and up and up. And then if I click on 25 years, based on a 5-year dividend growth rate of 21.6%, which is assumed by Track Your Dividends, and a 4.69% yield, my ending annual payment will be $157,000 in 25 years. And that's before retirement age for me. So depending on where you land, go figure this out. You have both the snowball and the fact that companies are going to continue to increase their dividends if they're good quality companies. And then you're going to make extra income in dividend. Guys, this is the secret of the rich, and I'm hoping that you found some success and some learnings in this video. I know a lot of you have been asking me for some updates on how to actually look for good quality dividends. So I have a video series coming to this channel, so make sure you subscribe so you are the first to see it on how you can analyze, very easy from a beginner's point of view, how to find and attract the best dividend paying stocks and ETFs. But until next time, here are some videos that might be helpful to your future success, and we'll see you on the next video.